Welcome back to the Cygnet Capital Podcast, a weekly discussion for sophisticated and wholesale investors navigating the ASX and broader financial markets. Before we start today, I must give the general advice warning. As always, a reminder that everything we talk about today is general in nature and doesn't constitute as personal financial advice. Please do your own research or speak to a licensed advisor before making investment decisions. Past performance is not an indication of future outcomes or results. Cygnet Capital is an authorised representative of Cygnet Securities Pty Ltd, AFSL 241095. Cygnet Capital and its employees may hold shares in all the companies discussed today on this podcast. I'm your host, Sienna, and today I'm joined by Jonathan Rosham, John Cathcart, and David McGlashan to discuss updates around rare earths, John's trip to Broken Hill, and lots of interesting market moves.
Thanks. Just a quick update. We've had a couple of weeks off because David and I have been hit by some strange bug, haven't we, Dave?
Laid flat.
Yeah, and I was pretty much laid flat too for a week or so. John escaped to Broken Hill and has been up in Sydney at IMARC, so lucky enough he has avoided whatever we had, Dave. But it's given us an opportunity to do a little bit more work and work through a couple of scenarios and companies that we've been looking at. So I'll move on quickly to the commodity update. So gold hit a fresh high this week of $4,252 an ounce. Our friend Jamie Dimond is a bull there, saying the potential is for gold to go to $5,000 to $10,000. Central bank buying, EFT flows, and the de-dollarisation are key drivers. Morgan Stanley is shifting to a 60-20-20 portfolio with 20% gold, and JP Morgan is saying that it's a hedge against inflation and policy risk, which we know about. Obviously spiked because of the tariff concerns with China. We've seen it come back and consolidate a couple of $100 the last few nights anyway. Overnight was down as well. Back towards the 4,100 mark. So silver's come back with that as well after hitting an all-time high of $51.92. The gold-silver ratio is trading about $82, which is above long-term averages. So it suggests that in the short term anyway, we might see more of a consolidation in the silver. Physical shortages in London and India, backwardation signal stress in the paper markets. So potential on the next run maybe to see another leg up to $80 to $100 an ounce. Copper. Heard a really interesting story on copper this week around the demand dynamics. I think copper's shaping up to be an area of speculative demand in the metals. It tends to run after gold and copper. Closed at $4.97 a pound, down a bit from recent highs. The Chinese smelters were increasing exports due to weak domestic demand, but traders like Glencore and Trafigura are seeing record profits as well. The Canadian government is supportive of US investments in Canadian listed critical minerals companies as well, and we're starting to see some investments going to Canada and Alaska in relation to copper. Uranium, spot price is just down off its record. We spoke about uranium last episode. US is launching a strategic mineral reserve, and ISO Energy acquiring Toro Energy that we actually discussed in last week's episode as well, which was a little bit out of the blue, but probably says to you that some companies, even though mining is restricted in WA, are quite prepared to make a play to get hold of good assets, David. What do you think about that?
Long-term security, I think, is probably what they've got in mind there.
Yeah. The oil price continues to sort of weaken. I think there's a bit of a geopolitical play going on here with the US wanting to weaken that dollar price, so Russia is less likely to continue funding the war. So we see that continuing to stay under pressure.
This week's topic will be rare earths, as it's very topical. Jonathan, what do you have to say?
So this week we've seen a meeting between Trump and Albanese talking about rare earths, a commitment there in relation to Arafura in particular. We'll just quickly talk about the main critical minerals and what their uses are, just for everyone's benefit. So gallium is the first one. Semiconductor use. It's used in solar cells, LED, LEDs and lasers, and defence and aerospace, so radar systems, avionics and missile guidance. So as you can see, it's becoming a very big topic of tension between the US and China. So market size, 708 tonnes, forecast to reach 1,180 tonnes by 2030. China, as we spoke about, dominates global supply, 98% of global supply, with recent export controls tightening the availability and getting the US pretty upset. Australian potential, we're found in bauxite. John, do you want to talk about that quickly?
It's a byproduct of the production that just occurs alongside that mineral, so you've just got to extract it as you do with the alumina level.
So what you're saying, it's a byproduct of alumina refining, is it?
Yes.
So the US-Australian critical minerals deal highlights a total pipeline of up to $8.5 billion in critical minerals and rare earths projects, a median investment of US $1 billion each from the US and Australia over the next 6 months. Key projects, the Alcoa project, David, in WA, isn't it?
Yes, in WA, we're mining bauxite for a long time, and that's really their focus, is to link into the...
It was discovered by Western Mining in the 1960s on the Darling Ranges just out of Perth.
There you are.
That's it, and they'll produce 100 tonnes a year of gallium. Arafura's rare earth project Nolans in the Northern Territory received conditional approval for $100 million from Australia and $300 million consideration from the US Export-Import Bank, and 7 letters of interest from the US EXIM Bank, totaling $2.2 billion to companies like Northern Minerals, VHM, Graphinex, Latrobe Magnesium and Sunrise Energy Metals. So the strategic goals there are to reduce the reliance on China, which controls up to 90 to 95% of processing of rare earths. Germanium is used in optical fibres for telecom, night vision, thermal imaging and military-grade lenses, space-grade solar cells, high-speed transitioners and for quantum computing. All of these are areas of demand. So again, we have the problem that China produces and controls 80% of the world's supply, again upsetting the US.
Well, there's a real focus in those uses for military-related use, and you can't really afford to have your supply lines in the hands of your biggest threat in the market.
Tungsten, industrial tooling, used for cutting, drilling and mining tools. Armour-piercing ammunition, missile components, again, military applications. High-temperature alloys for jet engines, contracts, filaments and heat sinks, and emerging in materials such as high-density alloys. So, again, get back to the same theme. China, 83% of global supply. A lot of potential in Australia. We have known deposits and exploration activity, but production is still limited. So strategic opportunities exist. Antimony. Well, antimony's a area of great interest in the market at the moment, isn't it, with the takeover in recent days of Lovato. But antimony is used in plastics, textiles, military, bullets and electronics.
And fire retardant is one of its main uses.
Absolutely it is. So emerging in things like thermoelectrical and optoelectronic devices. There's niche applications for it in medicine and paints again. Price is really quite strong, $39,000 to $4,000 US a tonne. China controls a hell of a lot of the world supply there again. I think that the US is starting to work out that they have a high demand for antimony, in particular in the military, and as a consequence of that, they're spending a lot of time and effort on trying to bring local supply into production. Companies on the ASX with antimony exposure, strategic type positions, Nova Minerals in Alaska, just done a deal with the US Department of War, refinery at Port Mackenzie, military spec antimony by 2026-27, Resolution Minerals, Horsehaven in Idaho, Lovato, obviously under a takeover from American Antimony, Trig Minerals, Critical Minerals, Alkane Resources. All of these companies are getting really big investment flow because of the exposure to antimony. So we've got significant capital tailwinds with government grants, etc., and obviously the recent agreement between the US and Australia. Moving on to Broken Hill, where John has visited this past week or so. John, just a brief history of Broken Hill and tell us what you saw, mate.
Well, Broken Hill, what a tremendous site visit this was. Now, Broken Hill, just for a bit of historical notice, was discovered in 1883 by Charles Rasp, who was a boundary rider on the Mount Gibbs station. He discovered a rich silver lead zinc ore body basically outcropping on a low ridge, which he named Broken Hill. He and some friends then formed the Syndicate of Seven, which led to the creation of Broken Hill Proprietary Company, which is now BHP, and that was in 1885. Now, the line of lode extends for about 4 kilometres. The ore body is shaped like a boomerang, and the Broken Hill original company had the central part or the outcropping part of this structure. Broken Hill North and South had the down dip parts of the ore body. Now, this is one of the richest and largest deposits of lead, silver and zinc ever found, and it's produced over $100 billion in mineral wealth. Really, on the industrial impact, Broken Hill was central to the development of Australia's mining industry, in particular pioneering the flotation process, which is used to concentrate sulphide minerals which contain the silver, lead and zinc. It also contributed to the rise of the labour unions and the industrial rights movements to protect workers' wages and, in particular, safety. As a result, Broken Hill has become the first national heritage listed city, and that occurred in 2015. Mining continues today, and I'll talk a bit more about that. Now, we were sponsored by Broken Hill Mines, that's ASX code BHM. They have the Rasp mine, which is the old Broken Hill lease itself, CML7, and the Pinnacles mine about 15 kilometres from Broken Hill. Now, we started at the Pinnacles. This has been privately owned by the Mills family for about 75 years. They have just been tinkering around, and basically Broken Hill have structured a deal where they will come and build an open cut and a new mine there to produce a sulphide concentrate. We've got 6 million tonnes of ore at 10.9% zinc equivalent, so it's high grade, shallow. They're drilling now, so we can expect a good flow of news out of there, and then you'll see the application to build the mine. And also strategically, they have a piece of infrastructure about 15 kilometres from the mine, which is a rail siding. These are incredibly expensive to put in, like about $19 million. So basically, open cut, permit, build a small mill, and into production with the concentrate going onto the rail line straight down to Port Pirie. The next day we then went to the original Broken Hill mine, which is on concession mining lease 7. What Broken Hill mines have done here is basically pick up the original Broken Hill leases. Now, I can't emphasise how incredible this was to go underground and see the amount of ore that was left there by Broken Hill themselves. They basically lost interest and walked away. And
why is that, John?
I think it was low metal prices and the discovery of pivoting over to iron ore in the 70s. But this is, as you said earlier, the largest, highest grade silver, lead, zinc ore body in the world. There is so much ore left here that I can see this mine going for another 100 years.
Yeah, and Broken Hill Mines just announced a placement of $38.5 million. How far does that get them?
That will get Pinnacles into production. That's the main use of those funds. And the continued development of the Rasp mine, or the old Broken Hill mine.
So is it another potential billion-dollar company, John?
Well, it's certainly multiples of its current market cap. I can certainly see 5 times here, because it's really just started on its journey.
Okay.
And the thing, these companies get re-rated on credibility, delivering what they're promising, and then the cash flow. And I can see that path is clear.
And that Pinnacles we discussed a couple of episodes ago, David brought that up, that's really the game changer, is it?
Absolutely. This little mine has been locked up in a family for 75 years. So no modern exploration. They've been tinkering. The potential there is extraordinary. Drilling now, you'll get a mine, you'll get a mill, you'll get production, and I think the time frame will be short, about 1.5 years.
Okay, well that's very exciting. Dave?
Very good. I think that's terrific. It's a great place to be, always has been, and let's hope it makes some good returns for us.
Yeah, well, all right. There's a couple of other little companies sort of around the area, around Broken Hill, which are worth just keeping an eye on. We haven't done a lot of work on them, but we'll just mention them. Impact Minerals, market cap of about $37 million, has tenements in the Broken Hill area. Marmota, which is over in the South Australian side, close to the Broken Hill border, market cap of $50 million. Had a bit of a run lately on the back of some of its gold results. Havilah Resources, we know well. Got the Kalkaroo and Mutaroo projects in South Australia, more copper focused, but also had some really good uranium intersections of lately, market cap of about $60 million. And Cobalt Blue Holdings, that seems to have gone on a bit of a run recently as well. Cobalt, so one of the few Australian large-scale cobalt plays in the area as well, so just keep an eye out for those.
Moving on to this week's big hits.
That's a big hit.
So this week's big hits start with Lode Resources, ASX code LDR. It's positioning itself as a critical minerals explorer with a focus on antimony and silver. A project in New South Wales and Tasmania. Came out with a couple of hits this week, 4.8 metres at 9.92% antimony. 2 individual assays, 31.1% antimony and 26.4% antimony. It's the largest holder in the New England Fold Belt. Montezuma Silver Project as well. Drilling is currently underway. Recent intersections included 8.6 metres at 5% antimony and about 740 grams a tonne of silver. David, your views?
I think both of these projects are showing a bit of promise, and they're good hits. The antimony is supported by the silver, and they're really worth keeping a good eye on.
So investment highlights: high-grade antimony intercepts up to 31.1% stibnite, which is antimony, amongst the highest in the world. Strategic timing: antimony is obviously a crucial metal, which we've just discussed. Exploration leverage: large underexplored land holdings in tier 1 jurisdictions, and obviously we've got exposure to silver as well. So looking very interesting there. Strickland Metals, 57.6 metres at 1.2 grams equivalent from 166, 197.9 metres at 1.2 grams per tonne from 182. Over there in Serbia, really quite a exciting area that's starting to generate a lot of interest from the majors and a number of acquisitions, including Adriatic's recent takeover by Dundee Precious Metals. So very interesting there, keep an eye on that. Lodestar Minerals, Ned's Creek, Gidgee Flat Prospect, 16 metres at 1.94 from 228, 28 metres at 0.63 from 205, and 16 metres at 1. Strike extension confirmed, 330 metres of known mineralisation, and in a very kind area for mining. Potential 4K strike extension and follow-up drilling to test the deeper shear zones, so a fair bit of interest on that area as well, and that company.
All right, let's introduce this week's Tiger.
Tigers with Spots is a company we know well. We are quite significant shareholders and helped this company acquire the assets at Radium Hill of Lode Resources. The name of the company is Heavy Rare Earths. So market capital 11.2 million, cash of 2 million. They originally floated on the Cowalina Rare Earths project in WA, which has an inferred resource of 159 million tonnes at about 870 TREO. Much larger exploration target. They had a bit of bad luck in terms of timing when they listed, and they consequently spent a lot of money probably at a time when rare earths wasn't in favour and in vogue, and as a consequence of that effectively spent all their money, David.
They did, but then I think we got involved with them, a couple of years ago now, and helped them to pick up these tenements from Havilah. The Radium Hill area is quite an interesting area. It was really the first example of mining of uranium and radium in Australia. It was discovered back at the turn of the last century, 1906, and in fact a young bloke named Douglas Mawson at the Adelaide University identified a new mineral as a consequence of this discovery. He obviously went on to spend a fair bit of time down south in Antarctica. They were mining there in the early 1900s, with the ore being shipped off to process in New South Wales and Victoria. They built a radium refinery at Hunters Hill in New South Wales around about 1911. They produced radium bromide and uranium, mostly going into scientific use. Australia's always had a medical application for radioactive isotopes and medical applications. During the war, they got involved with the UK, and some of the uranium was mined by the South Australian government and sent to the UK to be part of the UK-US nuclear weapons program. It was really supplying material for them. They mined nearly 1 million tonnes, about 970,000 tonnes of ore, produced about 860 tonnes of uranium oxide, yellow cake. It was crushed on site at Radium Hill and then shipped down to Port Pirie for processing before being sent off to the UK. And that itself is interesting because the material has always had a rare earth component. And Jonathan, you've had a bit of a look at that.
We did, and we found that there is a significant rare earths element to the oxide alongside the uranium. And the tailing composition at Port Pirie contains things like terbium, dysprosium, lanthanum and yttrium, as well as a lot of scandium. And in fact, the historical records say they did produce scandium as well. So what we know about that particular tenement or that particular ore is that it's full of rare earths as well as the uranium. And getting back onto the ground and spending a bit of time there will hopefully start to unlock the treasure chest that we hope will create a significant re-rating. But recent high-grade results included 9,000 ppm of uranium, 936 ppm of scandium, and 1.89% of TREO, which is, John?
Total rare earths.
That's it. So you're talking about significant value in the ground. And then we move on to the Prospect Hill tin and uranium. Up there near Beverley and Mount G, very interesting project. In particular, they've acquired all of the mineral rights there, in particular for tin, where they've had intersections there in the past. They might even have a mineral resource of 3 metres at 4.85, 5 metres at 3.32. These are all shallow intersections as well. 6 metres at 2.3 from 14 metres, 6 at 1.85, 10 metres at 1.6. These are all considered very high grade tin, and they can go back in there and start drilling again. They can build a resource and get leverage to potentially a stronger tin price as well, having an economic deposit. We've also got the Lake Namba and Billaroo uranium paleo channels, which are quite close to Boss Energy's Gould Dam project. So they've definitely had a few spots. So when we talk about spots, we talked about bad timing in relation to rare earths. They've had a board there that's had a go. Richard Brecciani was involved with rare earths in the past, I think the Nolans project. He has stepped aside from being CEO, and Amanda Buckingham's come on the board. Amanda's just successfully working through a takeover of Lodestar Resources from Capricorn. So she brings a wealth of experience in the capital markets and recent success. Yeah, and our old mate John Montgomery Burns, he reminds us very much of the Simpsons character, doesn't he, John? We know very well. He's an old entrepreneur. He is old now. He was a young entrepreneur at one stage. Great success in Canada and Australia in this end of the market, but probably towards a stage of his life where it's time for him to take a backward step and enjoy his retirement. So he likes to go and play golf over in Ireland and spends a fair bit of time over in Europe. So we wish old Montgomery well in his retirement. But we've got Gabrielle coming on as chairman, haven't we? And
well, all boards need reinvigorating from time to time, and Gabrielle's got a lot to offer.
He certainly does, with experience with Adriatic, we mentioned before, being taken over, Ioneer, of course, and Invictus, which is having a lot of success, in particular over there in Zimbabwe with its oil and gas wells. So again, brings a lot of market support and experience to the board that's probably got a bit stale as a result of bad timing and unfortunate circumstances in relation to the Carolina project. So Tiger definitely with spots, definitely a truckload of upside. Just got to get on the ground, reinvigorate things, and we can see significant upside coming there.
All right, so what is on our watch list this week, Jonathan?
Yeah, our watch list. So we've seen some of these stocks really for a really good run. In the last few days, they've just taken a bit of a breather. Rapid Critical Minerals, we got a great trade out of that, 3.5 to above 7 cents. Currently trading at 5.2 because of the silver price pullback. Carnaby Resources, we're in them at 29. They're our biggest holding. Look at them today, 44 cents, John, but capped out last week at 53.
There was a peak in the market last week, and it's just giving off a little bit of exuberance. But I can expect it when the earnings start to come through in some of these companies, the large end will get a continued re-rate.
I think you're right. Broken Hill, we've spoken about them today. Originally, we had a price target of 45 cents. That was a month ago. We've got to up that. We've got to bring it back.
The site visit highlighted that this company has far more potential, and they're really only just starting to explain to the market what they'll have here. Production, cash flow, no end of reserves. It was the largest silver lead zinc ore body ever found. You can see this going through $1.
Yeah, well, Stellar Resources, we've been waiting to buy them. They peaked above 3 cents a week or so ago. Now they're getting back towards 2.5, under 2.5, heading back towards 2, we'd seriously consider purchasing those. Ballymore Resources, Sienna, we purchased 50,000 shares last episode at 14 cents, currently trading at 16. Drilling campaign coming up, so we can only see positives coming from those. We will hold our position there. I think we'll take off Zenith Minerals. They've had a bit of a run. They raised some money. They've come off their highs. They've probably lost a bit of steam in the market, so we're going to take them off our watch list now. Western Mines. We just did a placement in Western Mines, Dave.
Yes,
your favourite little nickel explorer.
Terrific position over there in Western Australia, and I think lots of good news to come out of there. Let's keep them on the list.
22 cents we went in at. We don't have any money to buy them, but we're certainly watching them. And Ioneer, again, went for a good run, coming back sort of not ready to buy yet. Might add a few more to the watch list. We really like Somerset Minerals.
Somerset doing great work in copper, and I think those drilling results that are coming through will confirm that.
And they're also Canadian based, which is one of our preferred destinations.
Yeah.
Results coming up now.
Up the next
it's looking
3 or 4 weeks.
Oh, at most.
Yeah.
It's looking like this deposit is not only thick economic grades, but it looks like it's getting better at depth. And if they've found a parallel structure in Lode, you're talking about very large tonnages. This could be multi-hundreds of $1 million potential. Market cap under 20 million.
Crazy price.
All right, we're going to buy some of them, Sienna. We'll buy some of them, 500,000 of those at 1.7 cents. How much are we spending?
8,500.
Thank you, Sienna. We will also add Lode Resources on, David.
We're going to pick up a position in Lode?
Not yet. We're going to keep
we'll
watching.
Put them on the watch list.
We're going to do more of a deep dive this week. We're quite interested in the antimony and the silver. It doesn't look compelling, but we need to have more of a look.
I think
on
that's
the
a good
watch
idea.
list.
On the watch list.
On the watch
Bit more
list.
work to do.
So we've got $1,000 in the bank. We need $7,500 to pay for our Somerset. So we've got 1,000 in cash. We've got 50,000 Ballymore, which we bought at 14, trading at 16. We can't sell them because they've got drilling coming up and we're there for the exposure, which leaves us with our 20,000 Carnaby, which we love the company, but we're going to have to trade them because we need to pay for the Somerset. With results coming. Now, Carnaby's copper, Somerset's copper, so we don't miss the macro theme. I want to buy Carnaby. I love Carnaby, but we're just going to have to do that in the short term because we're limited with funds. So let's do that. We'll sell our Carnaby at 44 cents. That's 8,800. We'll buy our Somerset at 1.7. That's 8,500, which leaves us with 1,300 in cash. So that leaves us with our portfolio. We've got now 50,000 Ballymore, worth about $8,000. We've got our $8,500 worth of Somerset, and we've got 1,300 in cash, taking our portfolio total to $17,800, up $7,800, Dave, in a month.
Which is pretty good. We've nearly doubled it.
Happy with that?
Happy with that. It's been a good month. You know, the sector's on fire. The gold and the copper thematics are there. The silver's followed it. Things are working to our favour.
All right, next week. John, we've got a special guest on next week. I believe an old lunch partner of you two on the Thursday.
And who would that be?
That'd be young Mr. Tomlinson.
Is it Mark Tomlinson?
It'd be Mr. Mark Tomlinson, who is a popular man at the moment.
As
with
chairman of
being
Lotto,
taken
subject
over.
yes.
And antimony very much being in favour, and he's going to come and give us a really good oversight of what's going on in the antimony market and hopefully be in a position to update us on Lovato and all of the machinations that have been going on there. So we're looking forward to seeing Mr. Tomlinson, and thank you, Sienna, for your efforts again. You're doing a great job. Thank you, John. Good to see you back. Good to see you're alive, Dave. I was worried about you there for a while. So over and out for this week. We'll be back next week with Mr. Tomlinson and a couple of other interesting topics to discuss.
As always, a reminder that everything today we've discussed is general in nature and doesn't constitute as personal financial advice. Please do your own research or speak to a licensed advisor before making investment decisions. If you're enjoying the content, make sure you join us weekly for updates. And just as a reminder, this is a space for wholesale and sophisticated investors only. We'll catch you next week for more on the markets.